Dear students, we will do a new module, module 35. It's all in this module also I am doing two problems for the computation of taxable salary. Each problem is different. So this is Mr. R, an Indian citizen, works in external affairs for the government, Indian government in Delhi. He was getting the following allowances and perquisites. Salary 4,500 per month. DA received in India 80% of salary. City compensatory allowance received in India 5% of salary. He was provided with a rent-free house at Delhi with a fixed fair rental value by the government as 4,500 per month. House was furnished for rupees 50,000 and air conditioner was hired for 1,200 per month and installed at his residence from 1/5/24 to 31/8/24. He is provided with a car of 1.6 cubic capacity and is used only for official purposes. So there is nothing taxable in that. From 1/12/24, that means December, he was posted at the Indian Embassy in Tokyo, Japan. He was paid rupees 10,000 as foreign allowance. Whatever he received in Tokyo will be exempted. Airfare for the employee and his family members was paid by the government. During his stay in Tokyo, he was provided with a free use of a car and rent-free furnished house. Compute his taxable salary for the assessment year 25-26 as per the old scheme if the salary is due on the first day of every month. So here RFA for 9 months we have to calculate. After that he was posted to Tokyo. So 9 months is what is the salary received. Here he is a government employee, so license fees fixed by the government. It is 40,500. 40,500. Add 10% of cost of furnishing. That is 10 by 100 into 50,000 into 9 by 12 because it's for 9 months. 3,750. 3,750. Now rent of air conditioner, that is May to August. 4,800. 4,800. So that is 1,200 into 4. May, June, July, August. Now taxable RFA is 49,000. 49,050. So this is the value of taxable RFA. Now salary for the computation. Salary we will compute, that is 45,000 into 9. That is the salary received in India. 4,05,000. 4,05,000. 4,05,000. DA 80% of that. 4,05,000. That is 3,24,000. 3,24,000. Next is CCA, City Compensatory Allowance, 20,000. 5 by 100, 5% of that. 5% of 4,05,000, that is 20,250. 20,250. Now car used only for official purpose, there is no tax in that. Taxable RFA value we have calculated 49,050. 49,050. Now whatever salary he received in Tokyo, 45,000 into 3. 1,35,000. 1,35,000 taxable, but whatever perquisites and allowances will be exempted. DA not taxable, city compensatory allowance not taxable, airfare not taxable, foreign allowance not taxable, free use of car exempted. Now we have to take the gross salary. We will get gross salary is equal to 9,33,000. 9,33,300. Now standard deduction you have to reduce. It is as per the old scheme. So he will get 50,000. So the value is 8,83,300. Allowances and perquisites in Tokyo are completely exempted. So this is the taxable salary, 8,83,300. Now we will do the next problem. Next problem you have to remember. Mr. J is an employee working in Assam, 50 kilometers from the city limits and is in a remote area. So remote area, what is the computation? I want to tell you. He provides the following information and you are asked to calculate his taxable income for the assessment year 25-26 as per the old scheme. Basic salary 20,000 per month. DA 100% of basic pay. That is 40% enters into computation of retirement benefits. Children's education allowance, his 2 children are studying in a school, rupees 600 per month. Bonus, 10% of basic pay. Entertainment allowance, rupees 1,000 per month. His own contribution to RPF, 12% of salary. Employer's contribution to RPF, 14.5%. So that is excess of 12% will be taxable. Interest credited to RPF at 12%, it's 24,000. Mr. J received an amount of rupees 50,000 as compensation from Oriental Insurance Company for a motor accident that happened 2 years back. That is the capital amount and it's exempted. The court has awarded him rupees 5,000 as interest for the delayed payment of compensation. He has received this amount along with the insurance compensation. He is provided with a car of 1.2 litre cubic capacity for both personal and official purposes. Expenses of the car came to 48,400 for the company. It was also estimated that 40% of the car was used for personal purposes. He is provided with a rent-free house in the plantation area. Fair rental value of the house is rupees 3,000 per month. He is not eligible for the house during summer holidays. The cost of the furniture provided is 40,000. Compute is taxable salary. This problem is important, you have to remember. This is about the computation of taxable salary in a remote area. So salary is 2,40,000. 2,40,000 is the salary. Now DA 2,40,000. 100% of basic pay, but 40% is only entering into retirement benefits. So DA also 2,40,000. 2,40,000. Next is children's education allowance. He is getting 600 per month, 7,200. Exempted amount is 2,400. That is 100 per child for 2 children. 4,800 will be taxable. 4,800. Now bonus 10% of 2,40,000. That is 10% of basic salary. 24,000. 24,000. Next is entertainment allowance, fully taxable. 1,000 into 12, it is 12,000. 12,000. Next is employer's contribution to RPF in excess of 12%. Salary for RPF is salary plus 40% of DA which is entering into retirement benefits. The value is 2,40,000 plus 96,000, 3,36,000. So 14% of that is 48,720. Less 12%, that is 40,320. So 8,400 is taxable. Similarly, interest credited, 24,000 is credited, 9.5% is only allowed. So full pension, full interest is 2 lakhs. That is 24,000 into 100 divided by 12. So what we have to do? 9.5% of that 2 lakhs we have to calculate. That value is 19,000. He has interest is credited is 24,000. So 24,000 minus 19,000, 5,000 is taxable. Next is insurance compensation exempted, interest for delayed payment exempted. That will come in income from, it is not exempted, it will come in income from other sources. Insurance compensation is a capital receipt and it is exempted. Interest for the delayed payment is coming under income from other sources. Taxable value of car. Up to 1,600, 1.6 cubic capacity, the value is 1,800 into 12. 21,600. 21,600. Now, the RFA is exempted, being in plantation area or in remote area where the area of the house is not exceeding 800 square feet. Compensation received from employer is taxable even if received as a gift. So it is 10,000. 10,000. Now we have to take the gross salary, 5,65,800. 5,65,800. Old scheme, so standard deduction 50,000. So taxable salary is 4,95,800. Sorry. The value is 5,15,800. 5,15,800. This is the correct value. 5,15,800. So this is what I wanted to explain in this module. 2 problems. Happy learning. Thank you.